we have the NASDAQ. This is the daily chart. And if you recall, go back on the 13th of July. I'm sorry, of August, last week. At the end of the stream, the last, I guess, quarter in terms of the length of the stream, I went through the process of going through the higher time frame. I think I touched on the weekly chart, but if not, I know I covered the daily. And I went through several levels. I said that, while we were on the 13th right here, I said longer term, we're reaching higher. So I'm not trying to pick the top in that. I mentioned that we would be reaching for mean threshold of this up close candle, extend that through, we hit that. I said the liquidity resting above here, and then I took your attention right in here. And we had this SIBI here, which we had a complete closure of that today, right at the close. So this candle's low, right here, this one. If you look up at this value upper left-hand corner, that low comes in at 19,868.25. Today's high, 19,871.75. So we cleared it. Okay. And this little shaded area in pink, that's where I think that we'll try to still reach up into. It'll be interesting once we get into this a little bit. It can go there and touch it and probably have a nice little retracement. I'd like to see it completely overlap the difference between this candle's close and this candle's open. So where there's no body, it's just a wick. Let's see. Okay, see the difference between this candlestick's body and this candlestick's body? It's only got one wick in here. That's a volume imbalance. You'll see and hear me talk about that at the end of the live stream last Tuesday. So in terms of bias, okay, we have been anticipating. We have not been looking for lower prices. We have not been calling lower prices, but I've been looking for intraday opportunities to push, by example, to my son Caleb, what could frame a exercise, like a practice session on how to read, interpret, get a feel for how far it can run, develop an eye and a knack with experience on fair value gaps and drawing to relative equal highs or relative equal lows, and also getting a feel for the session bias, which is going to define both the buy side and the sell side, which is always what I've been teaching. And whatever one of those liquidity are taken first, usually the opposite, it goes for that. Okay, so we had another example of that today. I went through the business of showing the, give me a second, I gotta go through the series of all these. I want to put my drawings back on. I had to delete it that way. When we drop back down in, all these levels will be pertinent. You'll be able to see them all. So I'm going to drop into a 15-minute time frame. And you can see today's action right in here. That's where the institutional order flow entry drill was called real time. Go back and listen to the live stream. You'll hear me outline these things and how this is below, that little area right there is below the opening price at 930. But just think about how this, that little part right there, that's basically the 930 first opening price. And then any movement down away from that is to be viewed as Judas swing or a fake move. It's to get people thinking it's going to drop, keep going lower. And then all of this move here is the trend following portion of the move. It means it's all directional, it's all one-sided like this. Okay. And then at the close, price will come off the highest high and settle off the high. Okay. And I counseled you today on the community tab of my YouTube channel. I said, okay, it's after 3 o'clock. If you have not taken anything, you want to pay the trader. So to take something off. Why? Because at 3 o'clock, that starts the last hour of trading. The last hour of trading is right there at that low. Just happens to be inside of a fair value gap. And then we have this protraction towards the close of the last hour. So at 3:30, we start this candle. It spools up into that little blue line, which is the close of the daily sell side imbalance, buy side inefficiency. And this is that volume imbalance on the daily chart. Those are all levels that were talked about last Tuesday. But because they're higher time frame, we don't constantly have to refer to them every single day. You just have them on your radar, and that's where we've been anticipating price to reach for. So for the yahoos out there saying that I'm calling the bias lower, I'm looking for shorts, I'm looking for longs, but I'm looking for things to teach my son how to engage, and all of you that are watching, anticipating price action, seeking liquidity, opposing liquidity against that move that would be tearing us up into here. Anytime it drops lower, it's done what? It knocks out long holders, scoops up their position, uses their stop loss that's below old lows to buy, and it gets them in sync with this underlying run. So we're going to take a closer look. Just remember, this little diagram represents one daily range, and I wanted you to anticipate the daily range starting at 9:30 here and where we close here at the end of the day. All right. Now, with that in mind, let's dig into the chart on a 5-minute basis. All right, so here's 9:30. So disregard anything to the left, okay? Just don't look at any of that stuff. Pretend it's not even there. You're focusing on just this candle right there. That opening tick that's right on that line. We drop. We go a little bit above the opening price. And then we drop once more, go a little bit higher, and we drop more, and we take out the low here and that low. See how those relative equal lows there? We drop lower, and then we started the whole idea of, as I outlined, I don't want to talk about what I looked at during the live stream because you go back into that and watch it. We were one-sided. We were anticipating the buy-side liquidity resting above these highs right here. But while we were down in here, and while we were anticipating the run up, I was outlining how being a buyer, and if you want to hold into trades with a longer term target, where it makes you a whole lot more handles, a lot more pips, a lot more points, if you will. Buying at that opening price or lower when you're bullish. Last Tuesday, I solidified it and made sure you understood that this is where we're going there. As long as we don't have a major wipeout and go lower, and that would be caused by something occurring over in the Middle East. And just go watch the stream, you'll hear me refer to those things. But here, that point of entry right there is the institutional order for entry drill. And we rallied up above what? The new week opening gap high for this week. So Sunday 6 p.m. opening compared to Friday settlement price. That is your new week opening gap. We trade down, then rally and start to build all of the same aspects of looking for higher prices that we walked through today and have been going through every single day since we started the series on the 2024 mentorship here. So for the folks that don't know my macro for lunch, I'm teaching again. So right here's the price. So you want to go backwards and find the first low, but it has to form after 10 o'clock. So let's do the math on this. Here's 10 o'clock. So yeah, we have a low down here. That's not what I'm talking about. Oh, well, we have a low over here. That's not what I'm talking about. Right here is 11:30. And you want to go backwards and find the first low, and that's this one. Did this low form after 10 o'clock? Absolutely. It's 11:17. So at 11:30, the macro will start doing what? It will seek liquidity that's trailed on that which has been profitable during the morning session. At 11:30, go back to 9:30. What has happened? The market's rallied. It's gone up. So the algorithm will seek what? The stops right below that low. Well, wouldn't you know it? As chance would have it, As coincidence would have it, all the planets aligned, the clouds parted, and here we go. It worked again. Not only is it taking out that low, for anyone that's trailed their stop loss rate below here, it's engaging the new week opening gap for this week. That's a reasonable expectation. It's going to gravitate and draw in price to cause more interest. So I told you that we're going to see it drop down for the lunch macro and upset sell side. And I explained, not just today, right now, but in other instances where the lunch macro starts at 11:30 and it can go as long as 1:30. It could keep going higher and not have any retracements. But if you start to see it sell off, all you have to do is find the first low at 11:30. Start going backwards. Where's the low that you're going to come to first? But it has to it has to happen to have formed after 10 o'clock. Why? Because it factors in any run that was created for silver bullet, any protraction in price action that's going higher. It allows you to get the obvious where everybody wants to jam their stop loss to. And that's this one right here. And that's exactly where it went to. And it also agreed with new week opening gap. See that? And then it rallies. So we had all this consolidation. We had sell side taken. And then we entered the 1:30 time right there. That closes the lunch macro. There's no more time aspect that's associated with going down to take the stops in this case. So now what is it free to do? It's free to start going in the direction from the early session lows and outlining that daily candle where the open is near the low and the close is near the high. If you start doing this and you just let one contract go, just let one go with the things I taught today, you're going to have bigger runs. You're going to have huge runs. And Tanja, who is one of my students who has now shown several times of making over 100 handles. I think she's the only one doing that right now. So this lesson helps her as well. It helps all of you. I want to see all of you do well. If you have the interest in live streaming, I would really get my rocks off if I saw people taking these types of trades down. And I gave it to you today. I laid it on a silver platter. I said, hold on to minimum 315. Why? Because that starts the last hour's macro. There's four macros in that last hour. But I told you it starts at 315, and that one runs to 345. Then you have one at 345 that goes to 4 o'clock. That's the one that we're going to go into and talk about now. So the market rallies up during the 2 o'clock hour, continues higher, and we have a little bit of retracement here going into 3 o'clock. And I said on my community post, I said it's after 3. It's basically time to pay the trader. If you have, when we looked at that little crude diagram that I drew out this morning, referencing the daily chart, the daily chart is basically what you see here, where it went up to the high. And then at the close, what's it going to do? It's going to settle off the high. So here's the close. Here's the high. And all the way down here is the low today. And that was me telling you that's the low risk buy. And then submit to what? If you want to take longer trades, you have to set your mindset on the time. Time. If you understand the Power 3 as I teach it, the highs, and here we are trading as the market opens up at 6 o'clock, trades right up into that volume imbalance on the daily chart. So we've already hit the low. If it never goes any higher than that, it's delivered based on what I told you last Tuesday using weekly and daily charts. That's bias. That's bias. But intraday, for my son to learn how to do this and how to get that same understanding that I'm sharing with you, you got to go through what I'm teaching here. If you're going to hold for bigger runs, the first and foremost thing is you have to submit to the time that's required for the daily chart or daily candlestick to form and close. So if you understand that we're bullish, as we are indicating today down here, I gave you the schematic of what it looks like on the daily chart, what to expect. So for you to hold to the close, you have to hold into that last hour of trading, right? And then you also give yourself time when 345 comes. Right there's 345. So what happens is the algorithm will refer back to what? Levels on a daily chart, levels on a weekly chart, and any time frame cycling through less than daily all the way down to the seconds. And it'll cycle right back up. And all inefficiencies will be incorporated, all liquidity will be incorporated, and that's how the algorithm gyrates and moves up and down. It's not buying and selling pressure. And I don't give a fuck what Tom, Dick, and Harry says. Tom, Dick, and Harry got it wrong in front of me today and got it wrong in front of my students, and I was doing the opposite of them as they said it. Whatever they said wasn't going to happen, I went right in there using what I teach, what I use, and it just like that. I was long in the afternoon in ES. Everybody else that supposedly uses this volume imbalance bullshit and depth of market stuff, they had no expectation of what was going on, had no idea. And all of this run here, that is algorithmic. It starts at 345. What's it going to spool to? Remember, think about you're that fishing pole holder. You're a fisherman, okay? And you're going to cast your lure to what direction? This level, which is the high of the sell side imbalance, buy side efficiency on the daily chart that I gave you last Tuesday, and the volume imbalance. So you're casting your hook in that area. Why? Because there's liquidity up there. And the market traded right into it here. That's what that pink area is. That was from the daily chart. It went and hit it just like that. So I gave you on Tuesday where the market's going to gyrate and gravitate to on a higher time frame perspective. But that's not to say that you can't take shorts intraday. You can. But I promise you, you did not see anybody else call out with detail as to why over 200 and some handles would be delivered. You didn't see that. It didn't happen. You saw it here. And the logic that I used is what's in this mentorship and every other lecture on this YouTube channel for free. So I don't know what else to say except for if you keep at it, you keep showing up, you'll get what you're seeking. You'll get it. But you got to give yourself time. Like I tell my son, you can't force it. And over time, you'll get it. You'll find things that are going to be a little bit confusing initially. The more time I spend over the charts, it'll make more sense to you. But this run here is absolutely algorithmic. Why is that happening? When are certain algorithms more prone to create big runs? Well, the last hour macro, obviously it starts at 315. And that one runs to 345. So in and of itself, you have that 30-minute window. And I'm looking for something that's going to cause the move off the high. So like, or here's the highest high of the day. And then you get this. That's the part that is the 315 to 345. 315 to 345 macro gets disregarded, and they use 345 going into the market on close. Market on close is that last 15-minute window. It's not 10 minutes. It's 15 minutes. It's 3:45 Eastern Standard Time to 4 o'clock. If it's earnings season, there will be an algorithm that fires at 4:01. And then you get this crazy run going into 4:15. And then when the regular session closes, electronic trading goes bonkers. And then you see some wild stuff. Okay. And I made, I think, a little less than $20,000 with a live account with AMP using that information I just gave you and shared it and showed it and proved it. So there you go. This occurred because of what I mentioned today. The Jackson Hole Symposium, like I said, it can create volatility. And folks that know that we're getting the opportunity to see a lot of volatility. They want to hurry up and get the run over with, basically. So the folks that the kind folks that run the market and are the fine makers of algorithmic trading, they were happy and nice enough to deliver what we were looking for on last Tuesday's objective long term. It's delivered. Any more run up into this area here that's shaded in pink, it's just a bonus. I don't need to have any more delivery in price to be right about it, okay? And since that volatility that's going to come by way of Jackson Hole Symposium, it's a group, it's a meeting, it's like a big builder beer meeting where they come around, it's a big circle jerk, and they think they run everything, and they certainly try to do it. So because it can create volatility in the marketplace that may be unfavorable, everyone that knows what's going on, as I'm outlining it to you today, and teaching on this lecture series and all the lecture series prior to it on this YouTube channel, having that big run up is reasonable. You think it's a fluke that I mentioned the Power 3 and told you to hold on to at least until 3:15 today? Go back and listen to it. It's there. So you're not going to worry about the little fluctuations in here and completely try to get out because that's the end of the day. No, they're going to drag this thing across the entire spectrum of time, which is taking you into what? The last few moments of trading the regular session. That's 3:45. And they ran us up into right there. They close in that SIBI on the daily chart.